thank you for being on this call today with Monica Rebella, CPA and President of Rebella Accountancy, which is a CPA firm that specializes in accounting, tax, and consulting services for hundreds of business owners and dentists in California. The topic of our call today is how ObamaCare affects your dental practice. And if you're not a current client of Rebella Accountancy, or if you have not met her, Monica Rebella is a CPA. She has 25 years of accounting and tax experience, which includes 13 years working with the Big Four, Big Eight firms, over 12 years experience working with dental practices. She's a past president of the Orange County Long Beach chapter of the California Society of CPAs and is a member of the AICPA. And she's conducted training sessions for accounting firms as well as lectured on tax and business matters to the California Society of CPAs, UCLA Dental School, and the Orange County Dental Academy. She runs her own firm in Tustin, California, providing accounting, tax, and consulting services for over 300 businesses throughout California, specializing in dental offices and small businesses. Monica, good afternoon and welcome to the call.
Thank you, Jeff. I really appreciate that nice introduction. And I look forward to anyone that's on this call that's never met me before or talked with me to chat with you more about this after the webinar here, because I think you're going to have a lot of questions. So let's get started. How does ObamaCare affect your dental practice? Well, the very first slide that you have here will let you know that I'm not going to cover the 2,000 pages of ObamaCare. I am going to limit this webinar to the insurance mandate in the Affordable Care Act, which is known lovingly as ObamaCare. And the reason I'm going to do that is that I've been getting phone calls from my clients that they're really confused on whether they need to do something, add insurance, adjust insurance. There's new information that's coming out, and they want to be absolutely sure that none of these things happening in 2013 and 2014 around insurance is going to affect their dental practice. So I want to limit it to here. We'll touch on a couple of items just to whet your appetite that there's more about ObamaCare that we've talked about in the past and will in the future, but this is about insurance. So the next slide is health insurance for employees mandatory? The answer is maybe. So here's what the Affordable Care Act says. The Affordable Care Act requires that businesses with 50 or more full-time equivalent employees, it's a mouthful, provide health insurance to their employees. And that's for, beginning in 2014. So it is not 2013. It's beginning in 2014. What's a full-time equivalent employee? Well, the way that they've defined this, and of course this is Congress and the IRS, is that you add up all the hours of all employees. You have to come up with a number even for people that are managers or supervisors that are not paid on an hourly wage. You have to come up with hours for all your employees. You divide by 2,080 hours. That's what the national standard of total hours of a full-time employee is, and that will tell you how many full-time equivalent employees you have in your business. If you have less than 50 full-time equivalent employees, there's no requirement that you have to provide health insurance to your employees. Okay? Under 50 full-time equivalent employees, you have no requirement. The Obamacare doesn't affect your business. Okay? So our next slide shows, if I offer insurance to employees, do I need to change it? And these are the calls I'm getting. I think I have to change my health insurance. Oh, I think I have to get insurance for my employees. Small dental practices do not have 50 full-time equivalent employees. Okay? In fact, unless you're Western Dental and you're all over the place, and I'm not even sure Pacific Dental has this, but probably Pacific Dental, you're probably fine. So don't sweat it. You do not have a requirement for your dental practice. If you already have health insurance for your employees, great, fabulous. You don't need to change it. You don't need to do anything. You're offering a benefit that's not required. You're doing it because you want to do it for your employees. You still don't have to change a darn thing. Keep it, make it as affordable as you want to make it. You can keep having it. the Affordable Care Act doesn't apply to you regarding health insurance with a small dental practice. So our next slide is, are there tax benefits to offer health insurance to employees? Absolutely there is. This was the incentive that actually started in 2010. It said, because they wanted to encourage businesses to offer insurance, that if you're a small employer, there is a small employer's credit for offering health insurance to employees. So you're saying, well, that's sounding pretty good. Well, what is this credit? And some people have heard about it. So our next slide is, what is this credit? So the tax credit is 35% of the health premiums for staff. Now, I don't know about everybody's practice that's on this call, but when I'm doing this for my clients, I found out that the premiums, and most of the premiums are going for the doctor and the family of the doctor, that the staff premiums are a small amount compared to the total it's being paid for everybody, which includes the doctor. But this is 35% of the premiums for just the staff. You know, the doctor and the family are taking out of this. And what I found in doing the calculations over the last couple of years, I do it for all my ongoing clients, is that if you have more than 10 employees or average salaries for everybody in the practice get towards $40,000 a year, 35 to 40, there's no credit. It ends up being zero. And in all the calculations I've made, I've had about 2 of my clients actually receive a credit in doing the calculations, which are mind-boggling calculations. And the credit's been $1,000 or less. So I don't want to give you an idea that it's a big credit, but there is a credit out there. It is worth doing a quick look to see if it would make sense. But it's not going to make so much sense that it offsets the cost of providing the health insurance for staff. I just want to give you a little heads up. But there is a small credit out there. Our next slide is, what are these insurance exchanges? So other calls I'm getting from my clients are, you know, I'm hearing about some insurance exchanges might help reduce the cost of insurance. That's true. That's part of the Affordable Care Act. When it first came out in 2010, this was a big discussion item. What are these exchanges? How are they going to work? Because, in fact, these exchanges are set up state by state, and they're federal funding. So the question was, is there going to be federal money given to the states? Is that going to really happen? They are happening. There are states that have already started them. So we do have exchanges happening. Be able to purchase insurance through a state exchange is very limited. It allows for certain income levels to be able to purchase it through the exchange. They feel that if your income is low enough, and it can be up to 400% of the federal poverty level. So if it's low enough, they feel you just don't have enough money to go out and buy it from insurance companies, so they created these exchanges. The idea is that there's going to be a big enough population in the exchanges that makes it worthwhile to the insurance companies to offer it at lower rates, because they do. They have to offer it at lower rates and get some subsidy from the government. Okay, our next slide is, what is the federal poverty level? It's because we know we get to 400% of the poverty level. So let me give you an example. The federal poverty level for a family of 4 is $23,550. That is the poverty level for a family of 4. 400% of that would be $94,200. So for a family of 4, if the total income for the whole family on the tax return is under $94,200, they can actually go to one of the exchanges and purchase insurance to them for the family and only pay a fraction of the amount of premiums, with the insurance companies getting a subsidy from the government. So that's really what's going on here with these insurance exchanges. It's to allow people to get insurance. They want to encourage this to that. Our next level says, well, what are the benefits of buying it through the exchange? Well, like I said, it makes it a very low cost for the family because the government's kicking in the amount. So what we want to look at is an example of, well, what would this cost? Is it really affordable? You know, is it what it's supposed to be? So, and by the way, California is just starting their exchanges. Other states have already got them in place, but California sign-ins are going to happen this October. So the California exchanges are being set up, and enrollment's going to start in October. So our next step is, what are the benefits, and giving you a little idea of the cost. The cost of insurance for a family of 4 for a Nevada exchange, Nevada has already set it up, is $1,000 a month. Okay, $1,000 a month for what's considered the absolute minimum coverage. However, this family, and we're presuming that they meet all the requirements with the 400% of the poverty level to go to the exchange, they would pay $250 a month, and the government would kick in the additional $750. So for this family, they would pay $250 a month, and for the whole year, that would be $3,000 a year for a family of 4 coverage. I got to tell you, that is pretty reasonable. So although they don't make a lot of money, they think that they could probably do this. And what they want to do is encourage this. This makes more sense than the penalties, and we'll talk about those. So let's go to our next slide, which is, okay, that's nice. How does this really affect my dental practice? Because you told me I don't have to do anything. I'm not really covered under this. And the answer is you're right. You're not covered in ObamaCare or the Affordable Care Act to have to provide insurance to your employees. However, people are going to start asking, and usually they come to their employer and say, what about health insurance? So it's kind of nice for you to have some information for your employees, to be armed with that, as well as yourself, to see what's going on. And our next sheet, it says, if you offer health insurance for your employees right now, that would be great. Here's an option, though. It is a cost. It does cost you money. Some doctors are asking for the employees to pay a portion of that. That's great. Or you might want to just drop it. Maybe some of your employees are going to be able to go to these exchanges and get insurance much more inexpensively. It may be a great opportunity for them to really get more competitive pricing and make it more affordable for themselves. As you know, they can go to 400% of the poverty level. So it could be a better deal for your employees to drop what you're doing and let them pick it up on their own, and maybe give them some kind of a reimbursement. So the next slide is some reporting that we have to do. So another reason why you might want to stop offering the health insurance, let them go to the exchanges, is that you have to report how much you give to your employees on their W-2 for health insurance. It is required this coming January. They put it off 1 year. So this January, the W-2s have to indicate the cost of health insurance for every employee on their W-2. And I put a caveat here. It's not taxable income yet. This is one of the items that's out there with Congress that they know people are not paying tax on, and they don't know why. They feel this is just like wages or any other benefit that should be part of compensation. So the minute we start reporting things, gives them an opportunity to tax it, but not yet. What it does do is it lets the IRS know who has insurance and who doesn't, because it's on the W-2. So they will already know that they don't have a penalty because they've got insurance. Our next slide continues with, okay, why is this affecting me? So if you stop providing health insurance, you might want to give them a reimbursement of a specific dollar amount monthly. Then they can go and get insurance that they want. Even your insurance broker could probably come in and give them quotes on insurance. You can still give them some kind of a reimbursement towards it, maybe very similar to what you're paying right now. But you don't have the reporting requirements. There are going to be more and more reporting requirements around health insurance and other benefits. So it just may be beneficial. But if you're already offering it and you think it's a great thing, by all means continue. Our next slide is, how can you be exempt from this whole buying health insurance thing? Remember, 2014, as part of the Affordable Care Act, requires we all have health insurance or pay a penalty. We all need to have health insurance or pay a penalty. There are a couple of exemptions from this whole part of the change in the law. If the cost of insurance is more than 8% of total taxable income on their total income on the tax return, more than 8% of the household income, which would be on their tax return, they don't have to buy health insurance. It's not affordable. They're exempt. They won't get a penalty, and they don't have to have it. This is another thing that you can do with your employees. You know how much they make. If a premium would be more than 8% of what they make, they don't have to have health insurance. They don't have to have a penalty. But watch out, if they're married, there's other people with income in the family. So you need to do that. Our next slide is addressing another exemption. If an individual or a family do not have a tax return requirement because their income is so low, they don't have to buy health insurance. And you can see here it's $10,000 a year for an individual or $20,000 for a married joint return. Very, very, very low standard. They are really not providing too much of exemptions here, but they've got a couple of them. Now we come to the next slide. Okay, I told you, beginning 2014, there is a penalty that they threw into the law. We've heard about this. It's going to be real, but we're not going to see it until 2015 when we do the 2014 tax returns. But here's what it is. So for 2014, the penalty is the greater of, whichever is higher, $95 a person in the household, or 1% of total income on the tax return. Okay? So I want to give you an example. Let's say that we've got a family and the total income is $150,000. That's 4 people in the family. The penalty if they don't have insurance would be $1,144. Now, I gave you an example of a family that made under $92,400 and that they could go to the exchange and they could buy insurance for $250 a month or $3,000 a year. Their income's less than $150,000. Their penalty would be pretty low. In fact, it would probably be the $95 a person. In the family of 4, it would be 95 times 4, and if there's kids under age 18, it's $95 times 50%. So their penalty would be quite low, and maybe it would make more sense for them to have the penalty than buy the insurance. That's the problem with this. It's really not an equal situation here. So that's what the calculation is for 2014, and it goes on your personal tax return because it's based on your income. Our next slide shows what happens when we get to 2016. So the law only gives us penalties for 2014, 15, and 16, and they have not declared what they would be beyond 2016. But in 2016, the penalty, it now becomes the greater of, whichever is higher, $695 a person for everyone in the household. $695 a person for everyone in the household, or 2.5% of income on the tax return. Okay? So again, if we take $150,000 total income for a family of 4, the penalty would be $2,860. Okay? So, but I wanted to throw in here just so that you know, if one person had $150,000 income, the fine would be $2,700. We showed that if that person could go to the exchange, it was $3,000 a year. Again, we do the math, but if you look at the math on the $695 times 4 people, and if any of them were under 18, it would be half of the $695. Their penalty is now getting close to $3,000 a year. So 2016, if the premium stayed at a similar level, now they're looking at, why not health insurance? We're going to pay the penalty to the same level as buying insurance. So that's where they're trying to lead everybody. But for many people, they can't buy on the exchange. The penalty is still going to be more reasonable, which is just crazy to think we're just giving this money to more taxes. But that's the law. So our next slides come up to really the crux of what's happening and why I'm getting phone calls, and you're going to get phone calls about this. What are insurance companies saying out there? Here's the phone calls I'm getting. Hey, I just got a call from my insurance company or my insurance broker, and they're telling me I have to make changes and I have to provide insurance to my employees. What's going on? Is this really part of the tax law changes, the ObamaCare? So as we said from the outset, your small dental practice does not fall under the 50 full-time equivalent employees. You have no requirement to have insurance for your employees. So insurance companies are out there. They're scaring people. They're saying every company has to have it. That's not true. They just want an opportunity to talk to you and sell you insurance. That's what's going on. They want to sell you insurance. There is a new product they've got out there. It's called Premium Only Plans, or POP, P-O-P. And I've heard this come up now a few times. They're selling this to the doctors and saying, it's just great, it's fabulous, a benefit to you, reduced premiums of your employees to have insurance, and you have to have the insurance, and your employees get to pay for it pre-tax. So here's how this goes. The insurance companies themselves have gone to the IRS and created a new benefit plan for just this insurance. It is a flexible cafeteria plan where the employees get to pay pre-tax, so they get to do it through payroll, where the money for the premiums comes out, then you apply taxes, and then they get back for themselves the money for paying premiums. They pay it pre-tax. And this is all the insurance company doing for these plans. You don't have to set up a new plan. You just sign up for this insurance. But you don't have to have insurance. And it's up to you whether you do. If you want to still have insurance, it could be a good thing. You just have to look at the price, and you have to figure out how to do this on payroll. So I've done it for a couple of clients. I'm not sure that the cost benefit is really there. There is some things about setting it up on payroll, but I want to make you aware the insurance companies are providing misinformation out there. They want to sell you insurance. They're telling you all have to have it. We know now. You don't, but there could be some benefits there. So to wrap up, again, the Affordable Care Act, ObamaCare, does not apply to dental practices because you have way under 50 full-time employees. If you offer health insurance, you don't need to make any changes whatsoever. If you don't offer health insurance, you're great. You're golden. You don't have to do anything, and you don't have to buy insurance. So I want to make sure that you're aware of that. Did tell you that I'd whet your appetite a little bit about Obamacare, the Affordable Care Act, and there are so many things to this, but I want to give you just a little heads up. So we've had a few years where we've been actually phasing in the Affordable Care Act. And if you remember at the very beginning, one of the things was that insurance companies could no longer not allow insurance, okay, to many people. But they started with children. So children with pre-existing conditions, at the very onset, they got to have insurance. If your child was under 26, you could keep them on your insurance. So there were some good things that started. And then it came up that there could be no lifetime limits on insurance, which was a great thing, and that's been phased in. Well, in 2013, this year, one of the funny things that happened is that if you have a cafeteria plan, flexible spending, where people can get reimbursed for medical expenses out of pocket, daycare expenses, beginning 2013, that went from $5,000 a year to $2,500. They slashed it in half, $2,500 a year. That's it. Okay, so that's new, and it can't be over-the-counter drugs like Claritin or anything like that. Then in 2014, we know what's coming is the insurance companies can no longer exclude people with pre-existing conditions from insurance. Everyone is to get insurance beginning in 2014. But unlike what this act is called, the Affordable Care Act, there is nothing in this law that says health insurance has to be affordable unless you're that poverty level group. If you're up to 400% of the poverty level, it has to be affordable to you, but not for anyone else. So there really isn't an affordable part of the Affordable Care Act for insurance. It's a real misnomer. We don't know where insurance premiums are going to go, but we're very sure they're going up. Insurance companies have already told us. So I wanted to just give you that heads up. And then, of course, as we mentioned, beginning 2014, where we do your tax returns in 2015, that's when we start seeing these penalties if we don't have insurance. So that just kind of gives you some items. There are also some new taxes that start this year that you'll see on your 2013 return come the winter and April 15th next year, which are the Medicare surcharge taxes for your income over $200 as an individual and income over $250 if a married return. So those are kind of just little heads up, but that's the end of the slides for this webinar. If you've listened to this and you do have questions or maybe some other things that have come to your mind, please feel free to give my office a call. I give a free hour consultation to the referrals that are listening to my webinar and from referrals from other clients. So the phone number here is 714-619-0667.
Great. Monica, thank you very much for taking time out of your day to give us this information. I know the dentists appreciate it. I'm sure there's going to be some changes down the road, and we'll do, I guess, everything that we can to keep everybody up to date on that.
Absolutely. If you want to be part of our newsletters that we send out by email, and we give you different updates and things that have changed in the law, things that have come to our mind, even some tax planning things, also call my office if you're not on it already, and we'll be happy to have you. But thank you all for your time and attention this evening, and Jeff, thank you for your help.
You're welcome. And again, thanks everybody for being on the call today with Monica Rebella, CPA. And the call today was How Obamacare Affects Your Dental Practice. Monica, thanks again, and we'll talk to you soon.
Good night.